Your gold-silver ratio is breaking down. Remember, we just warned that 90 level, roughly there, where you see the orange line. Every time was resistance, but for two events. This one and your most recent one. So what was previously resistance can be a bit of support. So we can go run that 92 target that we called for on the gold silver, but that does still leave you with the possibility that you get a bounce after this. You may even make a new high. I'm not sure. It depends how bad the debt contagion is. Or you might just set up to later break down. That means you put in the high and do that. Just be warned about that 90, 92 range, which you're now in. So great news for silver. Silver moving, the patient.
Despite silver's occasional volatility, especially relative to gold, the white metal has been on an upward trajectory since September 2022. While gold has garnered most of the attention, silver's performance has been roughly on par, with both metals doubling in value during this period. However, unlike gold, which must break new record highs to continue its advance, silver remains well below its 2011 peak near $50, potentially offering room for further outperformance as investors hesitate to buy gold at record prices. Expert and trader FrancisHunt notes, silver is breaking out with gold, and platinum is showing renewed strength. He highlights the gold-silver ratio dropping below the key 90 level, warning it may bounce but could break down further if debt contagion worsens. The Bloomberg Commodity Index was heading for its strongest weekly performance in 5 months, buoyed by broad-based gains, particularly in the energy and metals sectors. Notably, silver and platinum, often overlooked in mainstream investment portfolios, surged to fresh cycle highs, reflecting a growing investor appetite for tangible assets amid rising geopolitical and financial risks. From a technical standpoint, FrancisHunt calls employment data unreliable, citing major downward revisions as evidence of manipulation. Concurrently, Hunt urges focus on real assets and cross-border flexibility to counter systemic risks like the Great Taking. While gold may pull back short-term, he highlights silver's strength and the long-term value in miners with large in-ground resources.
That is your gold market, my friends. Since the 3-year, this is on a quarterly, actually, not a monthly, a quarterly basis. Wow, there's so much analysis on there. It's almost scary because it's so dense and rich. This is what gold has been doing. And what's happening now is that we are getting the fact that silver is starting to move too. Silver is starting to move too through 36. And more importantly, very suppressed platinum as well, I would almost say. So let's have a look at silver. New high, 36.16. Now, one cautionary on this, a slight cautionary. Your gold-silver ratio is breaking down. Remember, we just warned that the 90 level, roughly there, where you see the orange line, every time was resistance, but for two events. This one and your most recent one. So what was previously resistance can be a bit of support. So we can go run that 92 target that we called for on the gold silver, but that does still leave you with the possibility that you get a bounce after this. You may even make a new high. I'm not sure. It depends how bad the debt contagion is. Or you might just set up to later break down. That means you put in the high and do that. We don't know. We can't be sure. Just be warned about that 90, 92 range, which you're now in. So great news for silver. Silver moving, the patient, the monk patient silver investors, of which I am one, by the way, and a massive bull. This is what's going down. And what's happening today, guys? Do you know what's happening today? You're going to have fake number day. That's right. Remember, and there's a lot of analysts, I'm waiting for the data. Employment is lagging. By the time people are getting fired, they're lagging. It's a recession. It's a bad recession. It's turning into a recession. We've probably dipped in and out of recession at least twice. We met the criteria for a recession and they said, but employment's so strong. That was while Biden was hiring governments and contractors to governments with DEI folks and everything else and lying about the numbers. Don't forget, 814,000 yearly revision downwards. An 814,000 yearly revision downwards for 2024 during the Biden era. That was on top of individual months being revised down. I think there was probably about 8 or 9 of them out of 12 that was subsequently revised down. That's a lot of fake jobs that suddenly needed taking back out again. That's your birth death novel. Every time somebody opens a company, it's assumed there's a secretary, there's a CEO, there's all sorts of things being done. Sometimes people open companies just as a special purpose vehicle and for no other reason at all. Okay, so gold silver ratio, we'll be looking at that. The fake number comes out today, and that is why we will be having live trading day in not much more than an hour. You can come and enjoy what we are doing. An amazing FX trade right now with a primer HVF and a larger HVF. That's right. And a real story behind it. It involves the carry trade. Yes. Oh dear, the carry trade is becoming a problem. Must weaken the yen. Who controls Japan at a macro financial level, you might wonder. Check out what Professor Werner had to say about that post-World War II. But who do you trade it against? Oh dear, oh dear. There's all sorts of amazing things happening. You can see that FX trade in our opening hour and a half, where we'll be looking at the traditional markets, plus huge soft analysis, soft commodities. I'm not talking about my pippy. The erectile projectile that is platinum. Yes, we'll be talking about that as well. We will go into all the winning trades that actually you're going to have huge opportunities, guys. Kabuki theater is for all the people that watch TV. They're going to sit down there like little kids in front of the Punch and Judy show. You and I know better than that. The real money-making opportunities are happening right now on the short side, on the long side. That's right, real money. Build wealth. It's probably going to be our last freedom chance to build some wealth, to be a richer slave. And of course, to preserve it. To preserve it, we've got to worry about the great taking. We've got to worry about optionality across multiple nations. That's what we do for you at the Market Sniper. We'll be talking about some of that, but we're going to be looking at the charts, the HVF method and the chart. So, little warning on the gold-silver ratio. It may be a turn. It may be the final turn. It may bounce at 90, however, and it could still, if things got really disorderly and there's a storm into gold by the big money, you could still have a surge in gold again. Right now, gold kind of dull and limp, probably have a minor pullback, silver firm and strong. Okay, so that's what's going on there. Let's have a little look at, by the way, miners. Before we have a look at your thing, we showed you this order. It continues to go upside. It is a overperformance to the upside. What other miners are we looking at? And there's been some that have done exceptionally well, whilst we've also pointed out, till now, First Majestic, been a little dull, hasn't it? But in the longer run, the man with the most ounces in the ground, the banker that focused on accumulating merger and acquisition and getting bigger, even with some maybe not such great investments like Jared Canyon at cost for now, actually gets made good later when it comes to how much silver do you have in the ground. This is going to turn into a commodity. That's what's happening behind the scenes, by the way. That's why Trump wanted Greenland. That's why Trump wants Canada. It's not really to protect from those Russians who want to attack us all. United Kingdom, Keir Starmer, what he's actually saying when he goes war footing is we need to be able to steal more money from you. Us, the arms dealers, and the other hyenas all want to gorge on the carcass.
In the interview, FrancisHunt states the bond market is collapsing as the yield curve steepens and long-term rates rise. He explains financial repression as keeping rates below true inflation caused by massive government overspending. Hunt notes the US dollar is weakening, even against flawed currencies, especially gold. With ongoing trade tariff negotiations between the United States and other nations, investors perceive too much risk in American bonds and currency, and the same applies to other international assets as well. Therefore, the only sensible approach is to go risk off and invest in a commodity like gold. That theme might explain the 42% rally that the SPDR Gold Shares Gold ETF has delivered in just 12 months, signaling an apparent rotation and preference for the benefits that gold can offer during volatile and uncertain markets, such as the one most are experiencing today. Furthermore, he warns that banks are cutting lending due to high default risks and falling collateral values. He concludes the system is unstable, with banks holding huge losses on low-yield debt. Let's get back to the interview.
The dollar is still near lows, so the debt firmed a little bit on the long term. The story has been how it's at all-time highs, all the long-end debt curves getting higher, steepening of the curve. That is when you hit the crash. This is the yield curve inversion stuff we were talking about 3 years ago, 2 years ago, 1 year ago. You went inverted. When you revert, the problem starts to come, and then you get the steepening. That means the long end rates are getting higher. Despite that, they're not giving you a real yield. So what is financial repression? Financial repression is when they continue to run rates that are lower than the true inflation rate, how much they're proliferating, how much they're overspending. That's your true inflation rate. Not what they tell you through the BLS, drop the L, it's BS. No. Inflation is how much proliferation, how much overspending your government is doing to its income. That is all inflation. Ask Milton Friedman, he'll tell you. So, when you're facing the true inflation, financial repression is, even though the rates are staying stubbornly high, the actual inflation is a lot higher. They are devaluing both the currency. Remember, the milkshakers are all worried. What's supposed to be happening on the dollar? The dollar is getting weaker. The dollar is getting weaker, friends, even against garbage currencies, never mind against gold. The only thing you should be measuring it against is, of course, gold, but even against flawed euro and other currencies. We showed that chart yesterday, but I want to show it again. Let's just show you USD euro. People don't understand this is a change in trend. Oh, we must go back to TG Pink. It pops like nothing. The pink crogs of annotations is the TG Pink Koki. That is since 2008. The lows there, that is an end of trend. You broke the baseline, that was 91. You broke the upside funnel, both the entry and the stop, and you broke the bagel, which is the basing, ascending grind line, and it's been so long it's okay to call that a trend line. You broke the trend. What are we looking at? The dollar in euro terms, okay? It's inverted to the way you usually look at it. It's an inverse perverse world anyway, so we might as well all turn it down. This is how many dollars $1 buys you of euros. We've had a dollar strengthening period. The milkshakers have been telling you all about it. Everybody's been saying it. Well, it ain't anymore. It isn't anymore because they need to let that currency devalue to get that geyser that's ready to blow to release some of the pressure. Because the debt's taken a pounding. The debt, let's look at that as well. The debt, if we have a look at it, it is the TLT is the best example. This is an ETF of the debt. Let's wipe our face. There you go. That's your spiller, your absolute thriller all the way from Manila. That's your inverted HVF break short that we gave in September 2020. Boom, 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 bosh, rally bounce, triggering event on the right shoulder of a head and shoulder, down, 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 down. It's amazing that all this had to happen, and you only heard at the end of 2024 that Druckenmiller and Paul Tudor Jones is short. Listen, this thing went from a high of 180, we were shorting at 160s, right the way down through 100, and it traded to 80s. And the guys are telling you now. But there's so much more to come because they've got a record 7 trillion plus still to roll, and they continue to overspend. The big, beautiful bill. Is it beautiful? Raise the debt ceiling by 5 trillion. 5 trillion. I wonder what they see is coming. Oh boy, and is there some final plunder and theft that they intend to do? That's what's happened with debt. They need the dollar now to take some of the downdraft. They need the dollar to take some of the downdraft. And who are the slave nations? The hegemon demands to be buried with his slaves. Who are those slave nations? Go and check. Recently, number 2 in the overall nation holding of foreign nations of treasuries. The United Kingdom just overtook China, and of course Japan right on up there, owned and controlled at the macro financial level by the United States, the cartel that controls the United States. Remember, it's not the poor old Americans that are going to lose their living standards that are doing this. It is the international mercantilist predators, the parasites that will be shimmying on to the left and to the right after the decline of America. Okay, so what are you doing right now? You've got today, when the fake number comes in, it's going to get potentially volatile out there in the markets. Will it be a damn squid? We don't know. I suspect volatility. What they've got to come out and explain the state of the economy. That's what's going to happen. You're going to get a number. It's either going to lie like hell. By the way, you had a good JOLTS number and a bad ADP number. They're doing enough to muddy up the waters so that there's no overall exceptionally clear view. The truth of the matter is it's worse than it sounds. You're in a property-based collapse in the United States of America. You are having huge amounts of homes that are being listed for sale. You're having people accepting much, much lower prices. Why is that? Because it's a debt-based collapse. It starts with this chart right here, the TLT, because the banks do not want to originate any more debt. The probability of default is far higher. The probability of the borrower losing his job is far, far higher. The probability of the asset losing 50% is far, far higher. Do you want to lend if you're a bank in that environment? No, no, no. More collateral, bigger spread, much larger deposits. You want it all. Let me tell you, I know people doing developments in the States where all the buyers are zero down. Zero down. Did you hear that? Zero down.
After multiple failed attempts, even as gold hit new all-time highs, silver has finally begun its long-awaited breakout. But why now? Have the prospects for silver changed dramatically? Or is the gray metal's price rise reflecting something bigger? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.